The moments you've been waiting for. Nvidia earnings are out. Now, this was another strong quarter. The stock is down. It's thrashing around like a rag doll. What's going on with Nvidia earnings and where is the stock headed next? I've been investing for 25 years, and this is the most important earnings report that I've ever experienced. Some of these headlines, Nvidia has become world's most important stock. There's no question that the entire market, especially tech stocks, are riding on this earnings report. The implied move is 8% for Nvidia plus or minus. So 8.1% when investors react to earnings reports. And this is the 15 largest stocks in the S&P 500, average one-day implied impact to the index. And you can see Nvidia 54. Now it dwarfs everything else on the list. So what does that mean exactly? It equates to 0.54% move on the S&P 500. So how did Nvidia do? Reported 122% revenue growth on surging demand for data center chips. Now, why is this stock down? Well, expectations are high. I'll get to that in a second. So right now the stock is down 4%, but the earnings call is still going to happen here and we could see more volatility. But imagine if Nvidia missed. Especially if they missed on guidance, this stock would have absolutely got hammered. So beat on the top and bottom lines and provided stronger than expected guidance for the current quarter. Net income more than doubled to 16.6 billion or 67 cents per share in the quarter from 6.18 billion or 25 cents a share in the year ago period. Think about those numbers for a second. As of closing today, Nvidia was up 160% year to date with a $3.09 trillion market cap. Over the last year, it's up 168% before the 4% drop after hours. And over the past 5 years, up about 2,900%. So the data center business, which includes AI processors, climbed 154% from a year earlier to 26.3 billion. That's 88% of Nvidia's sales now. That beat the estimate of 25.24 billion. And of that, 3.7 billion came from companies' networking products. Now, approximately 40% of this revenue comes from those mega cap tech names in CapEx. So Microsoft, Alphabet, Meta, Tesla, used in the vast majority of generative AI applications such as OpenAI's ChatGPT. Nvidia also approved a $50 billion share buyback. That's not really a big number on a $3 trillion market cap. Let's dig a little bit deeper here. All right, so hot off the presses, right from Nvidia's newsroom. So these are record-breaking numbers again. Revenue, 30 billion, up 15% from Q1 and 122% from a year ago. So the first thing I heard, I had CNBC on in the background, well, the growth is decelerating. Yes, of course that's going to happen. When you're a $3 trillion company, you're not going to grow at 200% clip forever. We know there's a cycle to this. Blackwell's coming. Data center revenue, though, 26.3 billion. That's up 16% from Q1. That's still a really amazing number and 154% jump from a year ago. Hopper demand remains strong, and the anticipation for Blackwell is incredible. This is Jensen Huang, CEO. NVIDIA achieved record revenues as global data centers are in full throttle to modernize the entire computing stack with accelerated computing and generative AI. Now, these mega cap tech companies are going buck wild on AI. And I've heard quotes, for example, CEOs saying that the risk is underinvesting, not overinvesting. If you look at the CEO of Alphabet, he told investors in April that AI will impact the entire breadth of the company, but it won't come cheap. Where's that money going? To NVIDIA. Blackwell samples are shipping to our partners and customers, Spectrum X Ethernet for AI and NVIDIA AI enterprise software. During the first half of fiscal 2025, NVIDIA returned $15.4 billion to shareholders. And this is through repurchasing of stock as well as cash dividends. So the company still has $7.5 billion remaining and they added $50 billion today. It pays a dividend, it's not a whole lot, 1 cent. I like to look at these numbers on Seeking Alpha and you can see it was a beat by 4 cents. And that revenue, 122.4%, that beat by $1.31 billion. So of course, guidance and outlook, very important. Revenue expected to be $32.5 billion. The consensus was $31.75 billion, plus or minus 2%. So this is a slight beat on guidance. Gross margins expectation here, 74.4% to 75%. For the full year, gross margins expected to be in the mid 70% range. And I always love to look at these comments because they crack me up. pretty solid, not spectacular, but solid. I would agree with that. I think it's a great earnings report. It's just the market expectations are so high. We're going to look at a chart later. You just see how much this stock is absolutely ripped. Even from the beginning of August, the recent sell-off, it was down below $100 a share. And of course, you got Dan here. If you loved it at 140, you're going to love it at 70. Well, I've been long in this since 2017. Cost base is under $4. I'm not really sweating it, but if you think it's going to 70, hey, more power to you. And then, of course, Alpha with BitTech here says that it's a terrible report. I can't imagine if the report was actually terrible, how bad the stock would sink. Here's some of the highlights. Data center, you can take a look for yourself. Pause the screen. I'm not going to read through all this. The one thing I did want to point out is this NVIDIA AI Foundry service. So NVIDIA and global partners launched NIM agent blueprints for enterprises to make their own AI. So this is a catalog of pre-trained, customizable AI workflows that equip millions of enterprise developers with a full suite of software for building and deploying generative AI applications. And one of those partners is another Fired Up Wealth favorite, also reported earnings today, beat on top and bottom lines. CrowdStrike aims to secure the future of Gen AI innovation in collaboration with Nvidia. So it's providing additional safeguards for Nvidia NIM blueprints. That's what I just covered with AI native CrowdStrike platform. This helps developers securely leverage open source foundational models and accelerate generative AI innovation. So this is built-in security to streamline the development process. Let's start looking at some other things like reasons why the stock can be under pressure. One of those reasons comes down to margins. Now we just talked about margins and this was a slip. Even though 75.1% is solid, it was 78.4% in the prior period. Now that suggests that pricing power could slowly be eroding. It's still good. It's hard to really say with a 3.5% difference, but it is something to point out. And it's still up from 70.1% a year ago. I really think this has to do with pricing power, discounts, things like that. Of course, there's also expenses as well. So Taiwan Semiconductor, maybe they increase their prices on something that could impact these margins. In the fourth quarter, this is important because the next step, the next phase is going to be Blackwell. And so we're expecting these companies that are spending billions of dollars on CapEx to upgrade and other companies to join in. In the fourth quarter, we expect to ship several $billion in Blackwell revenue. This is the CFO, Colette Kress. However, NVIDIA said it expected the current generation chip called Hopper to increase total shipments for the next 2 quarters. Hopper demand remains strong, and the anticipation for Blackwell is incredible. This is NVIDIA CEO Jensen Huang in the press release. Of course, as you know, the gaming revenue used to be the primary focus, and I'm going to put an infographic up on your screen. I think this is absolutely mind-boggling. Gaming revenue did increase 16% from a year ago to $2.9 billion, but it's nothing compared to the data center revenue, and that's really the focus for NVIDIA. Graphics business rose 20%, reported $454 million in revenue, and also $346 million in automotive and robotics revenue. I think there's a lot of potential future growth in these areas. And here's some highlights for gaming as well as professional visualization. And then you have automotive and robotics. Unveiled the world's leaders in robot development, including BYD Electronics, Siemens, and Teradyne Robotics. They're adopting NVIDIA's Isaac Robotics platform for R&D and production. So quick glance at the income statement. You can see the numbers and the growth here. Pretty impressive overall. Significant increase in total current assets, as well as an uptrend, of course, in the cash and cash equivalents. So where is NVIDIA stock headed next? If you're new here, subscribe to the channel, smash that like button, and drop me a comment. All right, we're going to look at a chart. This is a good snapshot too. You can take a look at this. This is to see that income statement, where the money's coming from, that net profit, 16.6 billion. One of the headlines here, this is Market Watch, says NVIDIA earnings stock falls as revenue outlook beats, but not by enough. Now, again, the expectations were sky high for the stock. It's currently down about 6.61%. It's $117.31. Now, one thing you have to remember is the stock literally just went below $100 a share. And if we're being honest here, the stock is actually less expensive based on the financial metrics. It's less expensive right now than it was 2 years ago. But anytime you get to a $3 trillion market cap, expectations are sky high. And of course, you always say, well, can they keep this up forever? The answer is they can't keep it up forever. It's a cycle. We think that that cycle is going to last for another year or so. But keep in mind here, this is on Discord. Someone posted this in the NVIDIA DD channel, Easy Night. Jensen, in the closing remarks, said NVIDIA is at the beginning of modernizing $1 trillion of computing infrastructure. To put that in perspective, they'll be 15% of the way there after this full year revenue. So there could be tremendous opportunity for growth still here in the future. And that 1 year could could turn into several years. But I've been telling you on the channel, the stock's going to have this curve where it's going to go up and eventually it's going to come down and find a new floor. I think the stock is going to go higher after it consolidates. There's a little bit of a gap fill here. Let me show you the chart. All right, so first off, back in October, November 2022, this stock was between $10 and $15 a share. Now, we were saying pound the table buy $125 or less long term. Now, that's before the split. So we're talking about $12.50 a share. We said on this channel that Nvidia was the must-own stock for every portfolio. And a couple years later, the stock went from $12.50 to $140.76. This was the top right here. And most recently here in the beginning of August 5th, it sold off to $90.69. I immediately came out with a video and I said it was a buy, especially $100 or less as a long-term investment. Now, of course, you've been following this channel for a while, your cost basis is much lower, but I thought that was an opportunity coming down 40-50% from these highs. So we were circling these areas saying these are areas to look for if the stock comes lower, and these are areas to dollar cost average. Now, the stock is higher than that, at least at market close, and now it's come back down. You can see this blue line, $116.92. So it's in the middle of this first circle right now. Now we know the downside, $90.69 was the recent low. The S3 is below $85 at $84.96. The 200-day moving average here is about $87. So it's currently below only the 50-day moving average. It's still above the 100-day moving average. That's that red line. It's still above the 200-day moving average, and it's still above this S1, which is $105.73. Now I can't tell you exactly where it's going to go in here, but I do think the stock is going to consolidate. There's going to be a digestion period. I think the biggest risk right now is if Blackwell is delayed. At this point, I don't have a ton of clarity making this video, trying to get it out to you as soon as I can after earnings, but that certainly could take the stock lower. And there's definitely a possibility the stock goes back below $100 a share. This is going to be extremely volatile, especially when there's 3,000% gains over the past 5 years. But once the stock consolidates, I think the stock will go higher. And this R3 is all the way up here at $152.18. Now, I own 2,500 shares, and I'm looking to trim 500 shares when it gets above this $150 mark. I was originally going to do a limit order, and I cancel that limit order, and I'm waiting. I'm eventually going to do cash covered calls, and that's how I'm going to sell those 500 shares. 5 lots. I've been saying all year long. So the stock started out at the beginning of the year is way back here. This is January. The stock was $58. I told you it was going up to these levels, and I said it was going to be $150 or more in 2024. It hasn't gotten there quite yet, $140.76. I still believe there's a good chance that this stock is over $150 by the end of this year. If it doesn't get there by the end of this year, early next year, on the upside from there, you could see something as high as 165. And this retracement goes all the way up to 209, which is very unlikely anytime soon. But I think once this consolidates, if the market remains bullish, now if the whole market sells off, all bets are off, stock's going to lower. If the market remains bullish, this will consolidate. Buyers will come back in, and I believe it will be over $150 a share. If this video is helpful, make sure you subscribe to the channel, smash that like button, drop me a comment. Have a great rest of your day. Take care.